from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Senator Joe Manchin shocked Democrats and the White House with his opposition to Biden's $1.75 trillion economic plan, sending the future of Build Back Better into limbo. We will discuss. Plus, COVID cases spike and hospitals overflow just as the holidays arrive, and Omicron may not be the last variant we have to fight. And the metaverse is already here. That's according to Magic Leap CEO Peggy Johnson. We'll talk about the future of wearable devices in the 3D version of the internet. All of that in a moment, but first let's get a look at the markets where President Biden's economic agenda and a surge in COVID cases weighed on investors. For more, we're joined by Bloomberg's Kriti Gupta in New York. Kriti, walk us through how investors are feeling today.
Yeah, Emily, a double whammy, or should I say a triple whammy when it comes to stock market today. And even tech, big tech that tends to lead the benchmarks higher, couldn't rescue the market. You really see that in the S&P 500 closing 1.1% lower on the day. The NASDAQ underperforming a little, 1.2% down on the day, as much as 2% lower on the day. It has everything to do with the Omicron variant starting to gain far more traction here in New York City, as well as potentially spreading across the country. You also have on top of that Senator Joe Manchin withdrawing his support, crucial support for the Build Back Better plan of the Biden administration. And on top of that, it is, of course, the month end, quarter end, and year end. So rebalancing flows are all weighing on the market. I want to show you some money even came out of the Treasury market, even came out of the bond market, yields just a touch higher, and cryptocurrencies rallying, even though it was a very clearly risk-off day. I want to show you that technicals also played a part in it. If you look at a chart inside my terminal here, actually dropping, the S&P 500 dropping below its 50-day moving average, which for the better part of this year has really been support. The question is, does it drop below its 200-day moving average? That's that blue line behind me, because that would really mean that the selling is intensifying at a time when a lot of investors are expecting that Santa rally to come just next week. Let's end here with a micro story, and that, of course, is Micron reporting earnings after the bell. An upbeat forecast when it comes to semiconductor demand. The CEO saying that they are benefiting from the use of memory chips in a wider range of products. Good news for that stock, and of course, those shares up after hours, Emily.
All right, earnings still rolling in. Kriti, thank you for that update. Meantime, Senate Majority Leader Chuck Schumer says lawmakers will vote on President Biden's tax and spending legislation early next year. And he warns that if Republicans abuse the filibuster and try to prevent a vote, the Senate will consider changing the rules. This comes after Senator Joe Manchin stunned fellow Democrats with this announcement.
If I can't go home and explain it to the people of West Virginia, I can't vote for it. And I cannot vote to continue with this piece of legislation. I just can't. This is a no on this legislation.
Losing Manchin's support is essentially the nail in the coffin in a 50-50 Senate where Republicans uniformly oppose it. To discuss, Bloomberg's Mario Parker joining us now from Washington. Mario, what does this mean? Is that the end?
Yes, it was a devastating blow for the president's agenda to end out the year. Build Back Better, which shares his campaign slogan, was the centerpiece of his early presidency. And Joe Manchin's reluctance, or even his definitive statement yesterday that he wasn't going to support it, essentially puts the death nail in Build Back Better, at least for the time being.
So White House Press Secretary Jen Psaki saying they're still going to fight like hell to get it done. She used those words. Is there really any possibility at this point?
Well, cooler heads seem to have prevailed. She issued a blistering statement toward Manchin yesterday. That rhetoric kind of softened as the evening unfolded. And then you see, as you alluded to this afternoon in the press briefing, Jen Psaki referred to Manchin and Biden as friendly still. And she also said that the president is going to work like hell to pass his economic agenda. That does leave the door open, possibly for maybe a pared down version of BBB next year, maybe some components of it. We just don't know at this point. All we can go off of it as of right now is that Manchin said yesterday that he essentially can't vote for this bill.
But what does it say about the future of consensus in the Democratic Party, not just for this, but other measures to come going into the midterms?
Yes, it ticks off a fresh internal battle between varying wings of the Democratic Party. For a good deal of this year, we saw the progressive wing of the party, led by Representative Pramila Jayapal, AOC, the Squad, and others, vehemently opposing some of the rhetoric that centrists like Manchin or Kyrsten Sinema in Arizona were saying about some of the policies in Biden's, his legislative policies. And so now this ticks off a fresh battle. They voted for his infrastructure bill in good faith that he could convince Manchin to support Build Back Better, which has a lot of progressive initiatives in it.
All right, Mario Parker for us in Washington. Appreciate that update. Meantime, President Biden is set to outline new steps in the fight against COVID-19. The White House saying the president will speak tomorrow and announce what the administration is doing to help hard-hit communities, while also issuing a stark warning of what winter will look like for the unvaccinated. Bloomberg's Robert Landgraf joins us now with more. Robert, talk to us about the state of Omicron and especially the outbreak happening right now in New York City.
Yeah, Omicron is clearly spreading fast. Cases are definitely increasing a lot in the New York, New Jersey area. I think New Jersey is having some of the highest number of cases, it ever had. And so it is absolutely spreading fast in the Northeast and parts of the Midwest. But, what's less clear is the severity right now, and that's the big thing we need to look at. A lot of the cases in hospitals and the people dying, those are still unvaccinated people. So it's, while Omicron can cause breakthrough cases, it's not so clear that those are going to be severe breakthrough cases.
We did get some positive news about the effectiveness of the Moderna booster against Omicron. What do we know?
So Moderna came out with some of the early data of its shot against Omicron today. And what that data shows is kind of like as expected, 2 shots alone, just the single first 2 shots, don't do that much to protect against, breakthrough symptomatic cases are likely to be less good. This was not actually a study of cases, but a study of antibodies. But the antibodies are vastly reduced with 2 shots. But if you get a third booster shot, the antibodies go up 37-fold. So a big increase in antibodies. So this is indicating, as we expected, as we saw also with the Pfizer shot, that to really protect against symptomatic cases with Omicron, you're really going to need a booster.
How many cases of how many new vaccinations are actually happening at this point where, you have folks who've held out for a year almost now saying, OK, maybe I'll get it. Is that really happening?
Yeah, it's a little hard to tell. I mean, certainly, things are going up right now. I haven't looked at the statistics in the last couple of days, so I can't tell you exactly. And certainly some of the statistics gets complicated with the measures of how many people have gotten first shots versus how many people have gotten boosters, because sometimes people have gotten a third shot and early on they didn't say they were really getting a booster because they got it before they were supposed to. So the statistics are a little murky there into who's getting what.
And how many people are actually getting boosters? I mean, I've heard stories of folks who, got the first round of vaccines, but they don't want to get the booster for the same reasons folks don't want to be vaccinated at all.
Yeah, I mean, all I can say is that, it appears to be, even though we don't know how long these shots are going to last, one of the things that we've seen with these shots is that they're highly effective early on, but the length of the efficacy, it doesn't appear to be super long lasting. And we just don't know the answer to that, how long the efficacy of the booster is going to be right now. But at least in the short term, it appears to provide strong protection. So that reason provides, a good reason to get a booster, right now before the winter, with these cases surging and people, still wanting to go and meet with their families for the holidays.
All right. Well, and these days going into Christmas are critical. Bloomberg's Bob Landgraf. Bob, thank you so much for your reporting on this. Meantime, in other news, Oracle making a bold move into the healthcare industry with its biggest deal ever. The company has agreed to buy medical record system provider Cerner for about $28.3 billion in cash. Oracle will be adding a broad customer base to bolster its cloud computing and database businesses. Coming up, if you're a last-minute shopper and running out of time, should you consider buying your loved ones some crypto or maybe an NFT? More on that next. This is Bloomberg. Bitcoin is extending its 5-week slide from an all-time high, the largest cryptocurrency by market value, falling below $46,000 at one point. It slumped about 32% since setting a record in early November. However, giving the gift of crypto seems to be the trend this holiday season, and Robinhood wants to help you do it. Starting December 22nd, Robinhood users will have the option to gift 7 cryptocurrencies, including Bitcoin, Ether, and Doge. Crypto, not the only hot gift on the market. NFTs also making the most wanted list. Many are comparing the tokens to lottery scratch-offs, the gift that could pay off big time. Here to discuss these gift-giving trends and to predict where VCs will be following Gen Z this year, we're joined by Megan Loist of Lara Hippo Ventures. Megan, great to have you back with us. So who's really gifting crypto and NFTs, and will it really pay off?
Well, well, thanks again for having me, Emily. I think it's great for Robinhood, right? Because they obviously have so many users on their platform that are already trading stocks, and this is a great way to bring the entire masses into the crypto ecosystem in a way that's very frictionless. Why give a gift card for the holidays when you can give someone an investment? And I think too, when you think about crypto NFTs, they're culturally relevant. And it gives your friends and family the opportunity to actually build wealth and wealth creation. So I think it's very interesting in that respect. And you can customize it with gifts and messages. For Robinhood, it's obviously a great user acquisition. It's great for referrals and bringing new users onto the platform. So I think Gen Zers will certainly do it, and a large portion of Robinhood's platform as well.
We're seeing a lot of companies get into NFTs one way or another, but we spoke to Janine Yorio, co-founder of Republic Realm, who says corporate America is getting NFTs wrong. What are you seeing that's problematic or not on the right track?
Well, I think sometimes with NFT launches, right, there is a natural gating, there's a limited supply of things. And so sometimes people will be upset if the launch is, not as accessible to as many people as they'd like. I think even for Adidas launched into the metaverse last Friday, which was great. They had 30,000 NFTs in their collection and sold 22 million in the span of an afternoon. But even then, I didn't get one. I think it's really hard. It's really hard to get access to everyone for these types of things. But that's kind of part of the value proposition, right? It's you want to create community, exclusive access to virtual events and merch, everything like that, where it's hard to please everyone with these types of launches. But there's a bunch of different ways to bring corporate America into the metaverse, right? You can look at companies like Genies, for example. It's one of our portfolio companies where they're actually partnering with Universal Music Group to bring their entire roster of artists into the metaverse through digital avatars and wearable NFTs. Forever 21 just did an activation, or they're launching one with Roblox to enable their entire 50 million daily active users to create virtual storefronts in the metaverse. It just creates a whole new sense of cultural relevance, I think, for a lot of new companies. But partnerships are the name of the game. You're not going to be able to please everyone, but what makes it exciting though is the community aspect, and sometimes you have to sort of limit that in some respects.
Right. Now, based on the Gen Z trends you tracked over the last year, where will Gen Z take us in 2022, and where will venture capitalists, or should venture capitalists, be putting their money?
Yeah, well, I think Gen Z is incredibly entrepreneurial. This is something we've discussed before. 40% of Gen Zers want to start their own business one day. And it's interesting. I think the notion of what a side hustle means for Gen Z is also different from previous generations. I think previous generations turned a lot towards gig work. Gen Zers are turning towards their hobbies to create wealth for themselves, right? You can look at Depop. Depop had a $1.6 billion acquisition earlier this year from Etsy, where 90% of their users were under the age of 25. What does that mean? There are Gen Zers. There's a girl, Bella McFadden. She's my age. She's 24. She made $1 million selling clothes on Depop. People want to be making money doing the things that they really care about and they're passionate about. The creator economy, I think that's certainly a trend. I think also, we talked a little bit about the metaverse. What companies are enabling digital ecosystems within the metaverse that are enabling sort of connection and culture. I think that's another big trend that we're watching. But I think just in general, expect to see more individuals becoming investors, and investing becoming more accessible to younger people or people that are outside of the traditional sort of ecosystem. And I think too, more founders coming from our generation, from Gen Z.
Now, my colleague Lucas Shaw, who covers the entertainment industry for us, wrote that Spotify, YouTube, and maybe even Netflix have a Gen Z problem. Would you agree? And is it only TikTok that doesn't have a Gen Z problem?
So I think if you looked at my Spotify Wrapped this year, I think I'm the one that has the problem, not Spotify. Like, I think depending on the tool, right, and like the user mechanics, how you bring people coming back into the ecosystem, all of my friends love Spotify. I don't personally use Apple Music. I think it really depends on the user preferences, but and also just where you spend time. We're living in the attention economy where every platform is trying to get a sliver of your time at the end of the day before you go to sleep, in between work calls, whatever it may be, because we're all busy, we're all working from home. But like, I use Spotify religiously. I'm incredibly dedicated to the Spotify platform. My younger sisters are, who are also Gen Z. And I think what's great is like they have these retention mechanics in place where like every year I look forward to my Spotify Wrapped. I am in the top 3% of Taylor Swift's fan base. That's something I'm very proud of. And like, they tell me that every year. So I'm going to continue to listen on Spotify and know exactly where I stand, who I listen to, who my favorite artists are. It makes it listening to music like really fun. I think, obviously TikTok has done a great job of retaining users, attracting Gen Z right there. When you think of consumer social, that like 1 billion monthly active user metric is best in class. TikTok did that in half of the time of Instagram, right? And I think there's a reason for it. It's because they're encouraging creation and remixing. They're tied to not only the form of video, but also trends, sounds, videos, which change every day. So, I wouldn't say that. I wouldn't say it's every platform. I think a lot of
that could be good and bad, Megan. Last week, TikTok had a major trending issue, this wave of school shooting threats circulating on TikTok that prompted some schools to close, some schools to bolster their police presence. We got a statement from TikTok saying they handle even rumored threats with seriousness, which is why they're working with law enforcement to look into warnings about potential violence at schools, even though they hadn't found evidence of such threats originating or even spreading on TikTok. How much do you think things like this will hurt TikTok? How much does Gen Z care that the platform can be problematic?
I think it's inherently like it's a double-sided coin in a lot of ways, right? I don't think these threats are going to keep Gen Zers off of TikTok. Like, TikTok it's a social company, but more than anything, it's an entertainment company. I think a lot of people come to TikTok after a long day and just like kick back and watch videos, and it's like very therapeutic. It's fun. But the problem with TikTok and the benefit of it, right, is that 99% of the content that you're seeing is discoverable. It's from people that you don't know. And so naturally, just as easy as it is to blow up like as a creator and get people onboarded into your mission or your videos, your presence, the flip side can happen for things that are inherently bad. And so I think just in that sense, it's really important for platforms like TikTok to really like embed these types of things into their tech. Like, how are they monitoring sentiment of things that are trending? How are they taking action? How are they working with law enforcement when things like this happen? I think the response last week was swift, but again, this is going to be something that continues to happen with just how the TikTok platform exists.
All right. Appreciate hearing your thoughts on that. Megan Loist of Lehrer Hippo will be watching to see how you follow Gen Z into the next year. Thank you. Coming up, Apple delays its return to office date indefinitely. We're going to explore what else is in store for the iPhone maker in 2022 with our very own Mark Gurman. Details on that next. And as we head to break, let's take a look at shares of Micron. Once again, the largest U.S. maker of memory chips, giving an upbeat forecast for the current quarter, helped by demand for data center gear. The company also benefiting from its memory chips being used in a wider range of products, from home appliances to cars, and not relying so heavily on PCs and smartphones. This is Bloomberg.
COVID is having an unfortunate resurgence, leading to growing case numbers in the new Omicron variant. And like every aspect of the world today, this is having an impact on Apple's operations. Over the past week or so, Apple has been forced to temporarily close about half a dozen retail stores across North America. That's due to a rise in employee case numbers and exposures in those specific areas. At the same time, Apple has restored its mask mandate at all of its 270 US retail locations. Once again, it's also limiting occupancy to promote social distancing. Outside of retail, the virus is also having a negative impact on Apple's corporate environment. For the fifth time, Apple has pushed back its return to office deadline. The change, however, this time is that Apple has told staff that the deadline is now a date that's yet to be determined. That's a shift from its previous February 1st date, which was a delay from January, and then from October, September, and June before that, indicating that Apple may feel like work from home is here to stay, at least for a few more months, is a new $1,000 work equipment bonus that it's giving to all of its employees globally. I'm Mark Gurman. This is Power On.
Don't forget you can subscribe to Mark's weekly Power On newsletter at Bloomberg.com. And let's take a look at some other stories making headlines. Airlines in the U.S. are ramping up their warnings on the new 5G wireless service. Officials say the new wireless signals threaten to interfere with equipment that tracks aircraft altitude, and it could prevent landings in poor visibility, leading to widespread delays, diversions, and cancellations. The wireless industry insists the concerns are unfounded. Equifax will start including buy now, pay later purchases on its credit reports. It is the first major credit reporting company to make this move. Equifax now has to persuade major buy now, pay later providers like Klarna and Afterpay to start reporting their customers' data to the company. And in China, the government has imposed an unprecedented $210 million fine on an online influencer for tax evasion. Huang Wei is one of the biggest stars on Alibaba's Taobao marketplace. Her job to convince shoppers to spend big on cosmetics, appliances, and clothing. The high-profile case may spook merchants and brands who rely on social media influencers to drive sales. And coming up, focusing on the future, we're going to take a look at big tech's vision for smart glasses and how the industry plans for you to use them. Details next. Plus, Peggy Johnson, CEO of Magic Leap, will join us when we talk about the next generation of wearable devices. She's coming up next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Let's get back to the markets with Kriti Gupta. And Kriti, a big deal for Oracle buying Cerner. Break that one down for us.
Yeah, one of the two big stories today in the tech space. Oracle actually is looking at buying Cerner for $28.3 billion, Emily. The Wall Street Journal reporting that it's going to be buying it for $95 a share in an all-cash deal. This is going to be the biggest deal for Oracle in a while now. But before we get to that, I just want to hit two really quick stocks here, and that is, of course, Apple and Ericsson. Apple actually filing a lawsuit against Swedish telecom company Ericsson against a 5G licensing agreement that they've had going back to 2015. This is going to be extremely significant because it has to do with market share. That's the theme we're going to talk about with Oracle as well. Ericsson actually losing some of the market share when it comes to those 5G patents, and Apple saying, well, if they're losing market share, they should lose the net payments that Apple has to do as well. So that is going to be some ongoing legal action to watch. But speaking of market share, this is why Oracle's deal is so important. Oracle actually losing market share within its own cloud business to Microsoft nonetheless, which is leading to this kind of bid into the healthcare space, and that brings it to Cerner. Compare this to the deals it's made in the last couple of years, though. NetSuite is the last acquisition it made in 2017, and it was only $8.7 billion. So this is a huge bet from Oracle going into the healthcare space, and it's earned them actually a credit watch negative from the S&P. Essentially, this idea that they have to really watch on what their balance sheet is like, how much money they're going to borrow to make this acquisition actually possible and successful without being downgraded to junk territory. That's going to be a really crucial thing to watch for the stock. Emily, I want to end here with the movers that aren't necessarily in the deal space, but rather in the crypto space. Bitcoin was actually down for most of the session. As we know, it was a risk-off day in the markets. I want to show you how it showed up in some of those crypto stocks as well. Riot Blockchain, Marathon, MicroStrategy, all lower on the day. The question is, will risk sentiment shoot back up tomorrow? And if it does, do you start to see those crypto names shoot back up with it?
All right, we'll be watching that, Kriti. Thanks much. Well, the idea of smart glasses has been around for a while now. As you can see, we've had Snap Spectacles, Google Glass, and more recently, Meta's tie-up with Ray-Ban. But can big tech make them mainstream? Well, they might with the help of opticians. Bloomberg Quick Takes Alex Webb explains.
During the lockdowns, people's eyesight got a lot worse. Now, that's bad news for species like me, but it's potentially an opportunity for the Silicon Valley companies that are betting on smart glasses being the next big thing. There's lots of data that shows quite how bad people's eyesight got over the past few years. In fact, in the UK, the Royal College of Optometrists found in a survey that 22% of Britons think their eyesight has deteriorated over the past 2 years. Similar data has come out of the US and China. That's potentially bad news for people who are looking at computer screens, but when you think about augmented reality, the companies that make those smart glasses think of it as real estate. If you're going to have to buy glasses anyway, well, it's easier to convince you to upgrade to something which has a little projector in it and lets you see the world around you. The challenge that that industry has is not only coming up with a killer application, showing that they look cool, that sort of thing, but getting them onto people's faces. The problem is these glasses are, right now at least, really expensive. Microsoft's HoloLens costs $3,500, and that's just the base price. If you're an early adopter, you might be likely to buy it. If you're a company that sees a corporate purpose for having these products, you might be likely to buy it. But for anyone else, before they think about spending that kind of money, it's highly likely they're going to want to try it on. That means possibly having some sort of brick and mortar location. Unlike Amazon or Apple, Facebook doesn't have an established distribution network. Apple has something like 500 stores globally. That's an advantage when you want people to try out your products before they buy them. What Facebook does have is a partnership with Ray-Ban. It's making smart glasses that have a camera on each side, let you upload photos and videos to Facebook's platforms, not least Instagram. But Ray-Ban is a unit of EssilorLuxottica. And as well as Ray-Ban and Oakley and Persol, it also owns LensCrafters, Sunglass Hut and David Clulo in the UK. In fact, it has 8,000 retail locations around the world. That makes Apple's 500 look relatively paltry in comparison. And of course, with smart glasses, particularly in augmented reality, there's a good chance that if you need corrective lenses, these glasses will have to be tuned to you. Having a distribution channel that therefore is an optician as well could give you something of an edge when you're competing with the other tech giants. But it does need to convince EssilorLuxottica to distribute its products beyond just these Ray-Ban glasses. It could cut some of the distribution deficit that it has to Apple.
Our very own Alex Webb there. And I want to stick with that idea of wearable devices and bring in Peggy Johnson, the CEO of the augmented reality company Magic Leap. Peggy, great to have you with us. Look, Magic Leap on your website says the metaverse is already here. What do you mean by that?
Well, because right now you can actually see ROI in the glasses that we have. Now, we're squarely focused on the enterprise, but our next generation device is smaller, lighter, faster. It's meant for the enterprise for long day wear. And it's interesting, you opened with the optics opportunity. We have a company that we're working with named Heru that does really eye exams with the Magic Leap device. And you can imagine that can make eye exams a lot easier to do. It can be mobile. You can essentially democratize eye exams rather than going to an office and having to, sit on one of those large machines that examine your eyes. We could do it for a fraction of the cost now with our partner Heru on a Magic Leap device.
We're waiting for ML2, the next version of your enterprise AR glasses. What's going to be so special about them, and when will they hit the market?
Well, as I said, smaller, lighter, faster, but also the field of view, which is essentially the canvas in front of your physical world that you can put digital content on top of. It's very hard to expand that, and we've doubled it in our next generation device. We've also made it a vertical representation so that, for instance, surgeons in the operating room might look down at a knee and have digital content overlaid on top of the knee, and then be able to look up and across the operating room at a variety of virtual screens that you can hang there. And then we've also done something interesting with dimming. Operating rooms tend to be very, very bright. We can bring that light way, way down and just focus on the area of the anatomy the surgeon is operating on, which basically is almost a way to turn the device from augmented reality, seeing your physical world, all the way down and including the outside world that is maybe too light for an operation. So you can just focus on what's important, whatever the surgeon is operating on.
But what's the timeline, Peggy? I mean, Magic Leap, along with many companies in this space, have been criticized for making big promises and not necessarily delivering. And there's also just concern in general about the lack of progress of wearable technology to really get us to that 3D version of the internet.
Well, we have devices in customers' hands right now through our early access program. We have 4 companies, plus many more, but 4 in the healthcare space in particular, including the company Heru I spoke of. And they're testing out the devices, getting their applications to run on it. We have a company called SyncThink that they do eye tracking analytics. So for instance, for brain wellness, the quick assessment of a concussion, they can use the 4 eye cameras that we have in the device to run through their algorithms and quickly assess if a concussion has occurred. We have another company, Green Lab, that's used it as a mixed reality viewer to plan the surgical pathways for brain surgery. So a number of companies that we're working with already, but we will be launching mid-next year with the device.
So here's a question. If I still have to put on glasses to visit this metaverse of the future, is that really the seamless, usable, scalable, accessible future that, you know, the big believers in the metaverse are pitching? Or is it something else?
You know, I think, and we believe at Magic Leap, the true promise of the metaverse is when your digital and physical worlds merge. It's not so much when you're fully occluded inside of a completely virtual second world, but when you can look up and see your physical world around you and overlay useful digital content into that physical world.
But do we need to have a killer app in order to really get there in a mainstream way?
You know, these apps that we're working with and these companies that we're working with, I believe, are the killer app. I believe it'll change the way surgery is done, the way healthcare is delivered, by having really a heads-up view of your physical world and useful applications that really are a tool to change things from 2D. Think of it, surgeons used to look at a 2D screen in front of them of an image of a brain. Now they can have the brain in front of their eyes. They can spin it around, they can walk around it, they can walk inside of it. It'll definitely change the way physicians are showing their patients what's going to happen and how they plan those surgical pathways.
You were in the C-suite at Microsoft for so many years, and I'm curious how you see Magic Leap competing with the likes of Microsoft and Facebook, which are huge companies with deep pockets that are going to be investing heavily in this technology.
Well, there's definitely enough room for all of us. We're focused very much on enterprise and in just a handful of markets right now. The healthcare space, as I said, manufacturing, and the public sector and defense markets. These are areas that are already used to having displays on it, and we have useful applications and companies that are building tangible return on investment with these devices already. We intend to partner with companies going forward. In fact, the metaverse buzz has really brought a lot of interest back to Magic Leap, our feature set, our device. And so we're excited about what the future holds.
Peggy, we were looking at the video that Magic Leap originally released. This is before your time at the company, with the elephant in the hand that created all this buzz about the future of augmented reality. Is that elephant really possible someday, or does it already exist in, you know, maybe more exclusive enterprise circles? Or, you know, is the vision that Magic Leap has now completely different?
You know, the vision has just narrowed a bit. I fully believe we will circle back to consumer at some point, and, you know, do things in the entertainment space, you know, with elephants in our hand. But right now, what's possible is what we're doing in the enterprise space. And I think it's very much like mobile phones. In the beginning, they were largely used by enterprise, and the size and the cost were less of a factor to enterprise than they are to consumer. But certainly over time, with further silicon integration and componentries coming down, we will have a device that consumers can and will wear all day long in more of a glasses format.
Okay. All right. Well, Peggy Johnson, CEO of Magic Leap, good to catch up with you in this role. Appreciate you taking the time to join us. Coming up, athletes are wearables' biggest customers, but what to do with all that data collected? My next guest has the answer. This is Bloomberg. invention of sports data inevitably makes most of us think of Moneyball, but sports analytics is so much more than that today. Sports teams are collecting millions of pieces of data per athlete, and it's only projected to keep growing. But what do they do with all that data? My next guest is helping to streamline it all so organizations can make use of it. Joining me now is Stephen Smith. He's the founder and CEO of Kitman Labs. Stephen, thank you so much for joining us. So harnessing all of that data has come so much farther than Moneyball, as I just said. Talk to us about how athletes and sports organizations are using the data they're collecting on athletes today.
Yeah, well, I think your intro around Moneyball is a great one, right? I think Moneyball started this, and there was a huge concentration around like the ability to analyze performance data in games to pick the right athletes. But the problem with that was it was just one sliver of information, just looking at performance data from games. And what we've seen is a huge explosion in data across every facet of an athlete's life cycle. So think of this more like, Salesforce for sports, right? So now instead of just looking at what happens in game, we can also look at, well, what's someone's mental state like and how does that impact their performance? What do we do with them in practice and how does that impact, the talent that we're actually developing? How does their fitness, how does their strength, how they sleep impact their performance in that day? And how does it impact even their likelihood to pick up an injury? So, the opportunities are huge. And for each of our partners globally, the way they transform that data into intelligence is different for each one of them.
Well, and there's the ethical question of, is all this data actually being used in the right way? Should this data be used to project a player's performance? I mean, we've all seen the players who have not performed in any way close to the way that the data predicted they would. What about the challenges?
Yeah, listen, I think actually we've started to see some really cool use cases recently with people like Kevin De Bruyne and using he brought in a team of quants and stats to help them to negotiate the biggest contract he's ever had with the City Football Group. And I think there's opportunities like that we're starting to see and otherwhere as well in sport, where we see people like Sue Bird, like LeBron James, like Tom Brady, like Cristiano Ronaldo, who have treated their body like a business, and they've invested in technology and data and analytics over the last number of years. And look at their age profile now and the performance levels that they have. I think that's where the opportunity is. If I was an athlete, I would be begging for an operating system or intelligence platform like ours to be able to help them to prolong careers. And I think the earlier we start collecting data on these athletes, the more impact that we can have. Maybe we see a future 10 years from now where we have 10 times the number of athletes like those who are still performing late into their 30s and early 40s.
Now, as a baseball and soccer mom myself, I have to ask, is this going to be used for kids younger and younger? Is this going to be used by their coaches to determine how much playing time they get versus time on the bench?
Yeah, well, I think it's certainly going to be used earlier in their life cycle. Like we now work with over 100 NCAA schools. We've started to work within the high school space. We've even started to work within the defense space. And I think it's going to be used, really to help us understand how do we maximize the potential of every young athlete? How does what we do with them every day in practice, how does, what we feed them, how we coach them, how we manage them and nurture them, how is that going to allow them to be a better athlete as they progress? So I think the opportunities are incredibly exciting.
All right, interesting stuff. Stephen Smith, CEO of Kitman Labs, will be following your company. Thank you. Coming up, we're going to take you live to San Jose, California, where a jury continues to deliberate in the trial of Theranos founder Elizabeth Holmes. We will have a report from the courthouse next. This is Bloomberg. The jury in the Elizabeth Holmes trial is continuing to deliberate the fate of the Theranos founder. The panel of 8 men and 4 women deciding whether the 37-year-old entrepreneur is guilty of defrauding investors and patients over the failed blood testing startup. For the latest, we're joined by Bloomberg's Joel Rosenblatt, who's been covering every twist and turn of this trial at the San Jose courthouse. Joel, I know you were in line at 2 a.m. this morning just to get that spot inside. What do we know as of this moment about what's going on in that deliberation room? Has the jury sent any notes to the judge or anything that might give us a clue?
Yeah, Emily, if I look a little bit disheveled or tired, it's because I was here at 2 a.m. They've been deliberating since 8:30 in the morning, and we've heard nothing, which says something, actually, which is that they're thinking the case through very carefully, as we'd actually expect them to do. The jury has a lot of evidence to weigh. We would expect them to be taking something of kind of a straw vote to see where they stand, and to then start sorting through the evidence. Don't forget that we've heard from more than 24 witnesses, and there's a lot of evidence to weigh. So they would begin that process. It's hardly surprising that we haven't heard anything. A note wouldn't be surprising, but we haven't heard that.
Now, the jury has listened to this trial for now almost 4 months. We've heard the reports from the inside from folks like yourself that jurors have been taking copious notes. So good to know that they are likely taking this seriously. From your perspective, is there any way to predict which way this will go? In your view, did the prosecution or the defense present the better case?
You and I have talked about this since the beginning of trial in late August, early September, and all along, I would say my sources and myself too, as part of my reporting, has favored the government. The government is favored in these prosecutions. It's typical that white-collar criminal defendants, when they actually go to trial, usually they plead, but when they go to trial, they lose. So it's the government's case to lose here, and they've built a solid case. So it would be surprising in this case if the government lost. There's no way of predicting. The one thing that Elizabeth Holmes' defense appealed to was finding just one juror, a kind of multi-pronged defense aimed at finding just one juror who might defect. And so that's maybe what's going on in there. That's what they're hoping is going on there, that there's at least one or two or three who aren't willing to go along for any variety of reasons that we've discussed and can discuss further if you want here.
That said, the jury has to be unanimous one way or another for a guilty verdict or a not guilty verdict. However, if just one, as you say, disagrees, this could be a hung jury, which wouldn't necessarily be a win for Elizabeth Holmes, which would be a win for Elizabeth Holmes, I should say, but not necessarily a vindication. Is that how you would describe it?
That is how I describe it. A hung jury would be a win of sorts. It would buy her time out of prison and more freedom. And how the jury splits in such a situation, or how it hangs, how the split goes, has a lot of impact on what happens next. If it's a close split, if it's a 10-2 or 11-1, well, you can expect for sure that the government will bring the case again. They'll retry her. If it's split closer to something in the middle, that's when you begin to see something maybe of a plea deal taking form, because both sides realize they've brought their best game and the result was split down the middle, and no one really wants to do this again.
Either way, well, whatever happens, certainly Elizabeth Holmes' own testimony, that 7 days of testimony, will have a pivotal impact. Bloomberg's Joel Rosenblatt, appreciate your reporting, your covering of the trial every single day, and that 2 a.m. Arrival time. Thank you. Now, the latest installment of Spider-Man has smashed the opening weekend record for a movie released during the pandemic. The film, starring Tom Holland, took in ticket sales worth $260 million in the U.S. and Canada, making it the top-grossing film released in the U.S. this year. And that does it for this edition of Bloomberg Technology. Make sure you tune in tomorrow. We're going to be joined by Max Levchin, CEO of Affirm, plus San Mateo District Attorney Stephen Wagstaff and Kathy Gao, partner at Sapphire Ventures. I'm Emily Chang in San Francisco. This is Bloomberg.